Okay, good morning, everybody. Thank you again for joining us for another installment of the Prestige series of COVID-19 webinars. For those of you familiar with our webinars and that have joined us before, you know me as Jason Flynn. I am the Director of Human Resources and Client Services for Prestige Employee Administrators. Along with us again this morning is my partner in crime, our tax manager, Carol Sawyer. We are always happy to have Andrew Lubash join us, as we've discussed in the past. Andrew has a long-standing relationship and involvement with NAPIO, where he's also the chairperson, and through this relationship, he's able to help not only Prestige as an organization, but ultimately trickles down to our clients, provide us with a deeper view from inside the lines when it comes to legislative updates and preparation, which allows us to do more for the clients that we have. We also have a familiar face with us this morning in Malcolm Slee. Malcolm is a principal at the Groom Law Group and is certainly not a stranger to our webinars. So again, it's certainly nice to have all of them with us again this morning for the webinar as we take you through some legislative updates. So let's talk about the agenda for today's webinar. Malcolm will be discussing some new guidance around the SBA that's hot off the press as it was just issued yesterday, August 4th. This will address borrower and lender questions concerning forgiveness of the Paycheck Protection Program loans. Then after Malcolm takes everyone through some frequently asked questions around areas such as payroll and non-payroll and loan forgiveness reduction, Carol and I will then take everyone through some additional frequently asked questions. However, these questions come directly from you, the attendees of these webinars, as well as our clients. They are things that we are hearing most often, and we figured if many clients, many employees are having these questions, chances are a lot of people on these webinars are as well. So we wanted to bring that out to the masses and give everyone an understanding about what we are seeing and relay that to you. As a reminder, all participants will be muted throughout the webinar. However, if you do have a question, please use the Q&A feature through the webinar technology and direct those questions to the panelists. Of course, not only do we like to utilize and say these questions or bring the questions to everyone here on the webinars, but we certainly want to make sure to answer everything that we can. A copy of the presentation will be available in the COVID Resource Center of the Prestige website following the webinar, so I urge everyone to take a peek. At this point, what I'd like to do is hand the reins over to Andrew Lubash, who wants to say a few words.
Again, hi, everybody. Hope everyone survived yesterday. That was interesting, and I hope I guess you have to have kind of power if you're on this webinar right now, so hopefully, your stay without power wasn't that long, and everybody is still well and safe. So again, we have the privilege of Malcolm today. I've known Malcolm again for an extended period of time, a long time. He's one of, I guess, Seth Peretta's cohorts over at Groom, so Malcolm always has big shoes to fill after he follows a couple of weeks of Seth. But again, it has been a privilege to know Malcolm. The insight that he's able to provide, as you'll be able to see today, is invaluable. Again, how plugged in Groom is in Washington is, goes without saying. Again, legislation or information that was just released yesterday, we're able to talk about today. Because again, they also see it's coming. They are also able to analyze it a bit beforehand. Again, every week I also want to make sure to let you all know that I am available. I'm available, anyone has any questions, any, issues they may want to discuss. I think I've put out my email address, which is alubash@prestigepeo.com. My direct line in the office is 917-258-0223. That will bypass our switchboard and come right to my desk. And then lastly, my cell number is 516-680-5021. So again, if you want to contact me via cell or text me or something along those lines with a question, I am here. Again, so as opposed to me sucking all the air out of the room, and I go back on mute and everybody in the office here applauds, without further ado, I'll turn it over to Malcolm.
Great.
Malcolm.
Thank you, Andy. And can you guys hear me? Can you hear me? Hello, hello.
Can you hear me now?
Hello?
It's like a Verizon commercial.
Yeah.
I hear you, Malcolm. Okay.
Oh, great. Okay. That's the toughest part. So thank you, Andy. Thank you very much for those kind words as well. Really, really appreciate it. And as you know, we really value our partnership with Prestige immensely. So it is always a privilege to come on and present with you guys. As Jason and Andy mentioned, today I'm going to cover some frequently asked questions that are hot off the presses. They were released just yesterday by SBA and the Department of Treasury. And can we move on to the next slide? I'm not sure if I'm supposed to be moving it or if you guys are. Oh, there we go. Great. Folks, might know originally Seth and I were going to come on this morning and talk about the what we're calling PPP2. This is sort of going to be the second round of PPP loans that appear imminent, hopefully if Congress can get their act together and pass the next COVID relief bill. At this point, as you guys know probably from watching the news, the COVID relief bill is kind of stalled, but we're relatively confident that at some point something will get passed. It does sound like there's bipartisan support for this sort of second round of PPP loans. I think, when we have a better understanding of what that is going to look like, Seth and I will come on and talk about what we're anticipating the program might look like in a future webinar. But since we got this guidance yesterday and we know people are very interested in PPP loan forgiveness, wanted to give sort of a quick rundown to you guys. I would say, these FAQs, and there are 21 of them, some of them cover ground that had already been covered. Some of them, the answers I think are unsurprising. Others, though, really interesting, covering topics that SBA and Treasury had not opined on previously. And another thing to keep in mind here is what we've seen in the past. We really hadn't gotten any guidance from SBA and Treasury on PPP probably since June. And sometimes these things come in flurries. So, the fact we got FAQs yesterday could be a signal that we might, get some additional regulations from Treasury, coming out relatively soon as well. So that's something we'll be keeping an eye on. If we can move to the next slide. So I will try and sort of walk you through the FAQs. And again, these are easily accessible if you go to the SBA website. They've got a dedicated page where they've sort of placed all of their PPP guidance. So it shouldn't be too hard to find. But I'll give you sort of a quick run through. And if any of these topics are of interest to you, I would encourage you to go to the SBA website, pull up the FAQs, and get more details. But I'll give you a sort of quick run through about the topics they cover. First topic relates to sole proprietors, independent contractors, and self-employed individuals who don't have employees. SBA confirms in the guidance that those folks should be completing the EZ loan forgiveness application form, which again, not a big surprise there, but I think SBA wants to make sure that people are using that EZ form. They're encouraging the use of that. The second bullet, is really targeted more at lenders, but I think it's important for borrowers to know as well. They make it clear that lenders can use scanned copies of documents, e-signatures, and e-consents for loan forgiveness applications and loan forgiveness documentation. Particularly important, obviously, in the current COVID-19 environment, where it's not necessarily easy to get, original documents signed or get notarizations. What we're seeing with some of our benefit plans is in situations where there's questions about whether or not signatures need to be authenticated. Companies are even setting up Zoom sessions with lenders or other entities so that they can get those signatures witnessed. So I think that's something the takeaway here should be, as a borrower, if you're having difficulty getting your lender to accept your documents, SBA and Treasury are sort of signaling they will accept the workaround. So there should be ways that you should be able to, get your documents over to your lender and have them approved. And then that last bullet there, again, this is something we knew from the recent PPP Flexibility Act that passed Congress, but I think SBA wanted to reiterate it. If you submit a timely loan forgiveness application within 10 months of the completion of your covered period, and just to reiterate that the covered period, again, is that either that 8-week or that 24-week period after you get your loan, during which they're going to measure what you're using your loan proceeds on, and the amounts that you spend during that covered period are the amounts that are generally going to be eligible for forgiveness. So if you can get your forgiveness application in within 10 months after the end of that 8 or 24-week covered period, you don't have to make payments on the loan until your lender actually receives the amount that should be forgiven by SBA. And again, that's assuming obviously that you don't have the entire amount forgiven, in which case you have nothing to repay. But if, it turns out that, say, 90% of your loan was forgivable, you still owe 10% on it. You don't have to actually pay on that 10% until SBA pays your lender the amount that should have been forgiven. So keep that in mind. Moving on, we got some good FAQs on what payroll costs are. Payroll costs, you'd have to go back and listen to our old webinars, which I'm sure probably archived over with Prestige, but we get into detail about the idea that most of what is forgivable under the PPP is going to be payroll costs, amounts that are spent on compensation or related things like benefits. So one thing that the FAQs emphasize, and again, we knew this, but it's good to keep in mind, payroll costs incurred but not paid during that 8-week or 24-week covered period can still be eligible for loan forgiveness if they're paid on or before the next regular payroll date. So, just as an example, let's say your 8-week covered period, let's say your 24-week covered period runs from April 20 to October 4th, right? So you've got a pay period ending on October 4th, and that's also the end of your covered period. But you don't actually you don't actually make your payroll payments until the next Friday, which is October 9th. So you're paying on October 9th for work performed through October 4th. Under these SBA rules, the payroll that you pay on October 9th can still be considered covered payroll costs because you're paying for services provided during the covered period. So it's a more expansive rule. Good news for borrowers. That second bullet there gets sort of to the alternative, which is that payroll costs incurred before the covered period but paid during the covered period are also eligible for loan forgiveness. So if your covered period began on April 20th, let's say, and you paid people on April 24th for work that they performed before April 20th, that is fine. You can still include your April 24th payroll as part of your payroll costs and get them, potentially eligible for forgiveness. So again, great news. And then that last point, I don't know how many folks this will actually apply to, but worth keeping in mind. If you happen to pay your employees less frequently than biweekly, it will be a little more complicated for you because your pay periods will not necessarily align with your 8 or 24-week covered period. So what the FAQ suggests is that you will have to figure out your payroll costs for partial pay periods if you have sort of a longer pay schedule. Again, I'm not sure that applies to that many employers. And unfortunately, what the FAQ doesn't do is actually explain how you would calculate payroll costs for a partial pay period. But that's something I think if you are in that situation, you probably reach out to your contact at Prestige. I'm sure they would, help you work that out. It seems like a common sense approach where you're applying sort of a payroll cost over a proportionate period would likely work. Okay, let's keep going. More FAQs on payroll costs here. When calculating cash compensation for the purpose of determining what is potentially forgivable, SBA and Treasury make clear you should use the gross amount before taking into account any deductions for taxes or employee benefit payments or similar deductions. So that is what you should be using when you're calculating cash compensation for the purpose of loan forgiveness. Don't look at the net amount, look at the gross amount. And they also make clear that payroll costs, they aren't just salaries and wages paid to employees. They also can include lost tips, lost commissions, bonuses, other form of incentive pay, hazard pay, as long as you keep in mind, and again, this is something we talked about on webinars, you can never claim for forgiveness more than a annualized cap of $100,000, which is prorated for that 8 or 24-week covered period. But again, this is good news from SBA and Treasury. They're confirming that almost any type of cash compensation paid to employees is potentially forgivable. Moving on. So there are a couple of really good, helpful FAQs in here regarding expenses for benefits, either group healthcare benefits or retirement benefits, sort of laying out what can be considered a payroll cost that would be eligible for loan forgiveness. At the top of the slide, we lay out what could be eligible for loan forgiveness. So you've got employer expenses for group health care that is paid or incurred during the covered period, insurance premiums for a insured group health plan if it's paid during the covered period or by the next premium due date after the end of the covered period. So that's good news. If you get your premium due date happens to come in for coverage during the covered period after the covered period, you can still include that as a payroll cost. And also any employer contributions for retirement benefits that are paid or incurred during the covered period. What benefit expenses are not payroll costs? It's really anything that comes out of the employee's pocket. So, and that would be regardless of whether or not it was pre or post-tax. So expenses for group health care that are paid by employees, again, whether pre-tax deductions or post-tax, that would not be considered a payroll cost. Employee contributions to retirement plans, so if you have employees that are reducing their salary and contributing those amounts into their 401k, that would not be considered a payroll cost, not something you could claim. And then expenses for group health benefits or retirement plan contributions that are accelerated from periods outside the covered period. So I think what they're getting at here is, if you're trying to maximize the amount that you might be able to claim as forgivable, it's not okay to sort of say, if your covered period runs through October, it's not okay to say, well, I'm just, I was planning to make a big contribution to my retirement plan in December. I'm just going to speed it up and, make that contribution during the covered period and then claim it as a, something that's potentially eligible for loan forgiveness. Currently, SBA and Treasury will not go for that. And then the last point there, keep in mind that when you're figuring out benefit costs for employee benefits, there are different rules that apply for owners, and these can be very complicated. But the idea here is that for owners of C Corps and S Corps, certain self-employed people, they're really paying for their employee benefits out of their own self-employment income. They're not contributing for that separately. And you're already going to be claiming that self-employment income as a payroll cost for the purpose of loan forgiveness. So what SBA and Treasury are getting at there is they don't want you effectively double dipping by both claiming that as compensation paid to an owner or an owner employee, and then also taking into account the amount that comes out of that to pay for employee benefits. If you can move on to the next slide. There is an entire dedicated FAQ relating to owner compensation, which is very complex, but I think very important. And I'm not going to go through it in great detail because SBA and Treasury does that for you in the FAQ, and I'd be sitting here for, probably 20 minutes just reading the FAQ to you. But this is a question we've been getting a lot, and I know folks are really interested in it. So if this is a issue you are dealing with, which is in terms of figuring out what amount of owner compensation is actually eligible for loan forgiveness, I would strongly encourage you that you pull up the FAQ and read through it. As you'll see there, they talk about different rules applying for owner employees of a C Corp, owner employees of an S Corp, self-employed, sole proprietors, independent contractors who generally are going to report net profit on a Schedule C for their Form 1040, general partners who are generally going to be reporting their self-employment income on a K-1, and then LLC owners, which is going to vary depending on how the business was organized for tax filing purposes. So it gets, particularly complicated, and there have been a lot of open questions because SBA and Treasury has not provided a ton of guidance on this. But the good news is the FAQ really does provide some additional detail. So again, if you are, one of the many people out there struggling with this particular issue, I'd encourage you to get on the FAQ, right after this webinar ends and read through it because it could be really helpful to you. Moving on. So we actually also got some additional FAQs on non-payroll costs, which was nice. This was another area where we really hadn't gotten a ton of guidance from SBA and Treasury. And just to quickly review, you can claim certain non-payroll costs as eligible for loan forgiveness. Generally, it is payments on mortgages for the business, leases for the business, and also utility payments for the business. But again, there wasn't a ton of guidance on this. So the first thing that SBA and Treasury advised us in the FAQs is that if you incur non-payroll costs prior to your 8 or 24-week covered period, but then pay them during the covered period, they can still be eligible for loan forgiveness. So again, that is terrific news. Quick example, let's say your covered period started on April 20th, and then on May 4th, you got your electricity bill for April. So obviously, the electricity bill reflects coverage for periods prior to when your actual covered period when you got your loan started. And you pay your April electricity bill in May during your covered period, that is fine. Those electricity costs would still be eligible for loan forgiveness just because they were paid during the covered period. So that is good news. Next bullet, kind of the flip side. You've got non-payroll costs incurred during the covered period but paid after the covered period. So let's say your covered period ends on October 4th, and then on October 6th, you get your electricity bill for September, which was during the covered period. And you have to pay that electricity bill by November. As long as you pay that electricity bill, you can still claim it as a non-payroll cost, and it should be eligible for loan forgiveness. Because again, this relates to costs that were actually incurred during the covered period. So again, a nice expansive rule for us. One of the concepts that has come out in the guidance is this idea of an alternative payroll covered period. And this was a accommodation we got from SBA and Treasury, which was if you got your, again, that the covered period is that 8 or 24-week period after you get your loan. SBA and Treasury came up with this idea of an alternative payroll covered period. So you could effectively take your 8 or 24-week period and align it with whatever your payroll periods were, so they matched up, which made a lot of sense. But one thing this makes clear is that that alternative payroll covered period applies only to payroll costs and not to non-payroll costs. So in terms of analyzing your non-payroll costs, it's always going to be based on that 8 or 24-week period that's based on when you actually were dispersed your loan. And then lastly, is interest on unsecured credit eligible for loan forgiveness? The answer to that is no. Payments of interest on business mortgages, real or personal property are eligible for loan forgiveness, but interest on unsecured credit would not be eligible for loan forgiveness. So keep that in mind as well. Moving on. So some more guidance on non-payroll costs. Let's say you had a lease. The general rule is that you can claim payments for mortgages or leases as long as they existed prior to February 15th, 2020, which was, effectively based on when the PPP was enacted into law. If you happen to have a lease or a mortgage that existed prior to February 15th, 2020, and you subsequently renewed that lease or refinanced your mortgage, your payments for that lease or mortgage are still eligible for loan forgiveness. So that is good news. One question we got a lot about and we really didn't have a good answer to was, as I mentioned, covered utility payments can be eligible for forgiveness. There were questions about transportation utilities, which were actually mentioned under the CARES Act, and nobody was fully sure what a transportation utility is. They provide some guidance on that and actually provide a link to a page on the Department of Transportation website. Transportation utility fees, and you learn something every day in this business, they're a financing mechanism that certain smaller cities use where transportations are basically treated like a utility, and businesses pay fees, are charged with regard to their property taxes based on sort of a, projected use of the transportation system. So it may not be applicable to you. Based on my limited understanding of it, there are only a few smaller cities that use this. I'm not sure if any cities in New York use this system or not. But if you've been wondering what a transportation utility is, again, check out the FAQ. They've got that link to the Department of Transportation website, and it provides some additional information. And then lastly, electricity supply charges. They are eligible for loan forgiveness. The entire electricity bill is eligible for loan forgiveness, even if certain charges are invoiced separately. For example, if your electricity bill is broken down and supply charges are billed separately from distribution charges, doesn't matter. You can claim your entire electricity bill for loan forgiveness. So again, good news there. Moving on. We also got some FAQs on this concept of the factors that can end up reducing what amount is eligible for loan forgiveness. So, to recap, you may recall that there are certain penalties that can apply which reduce the amount that is eligible for loan forgiveness if you have a reduction in your full-time employees during the covered period after you get your loan. So if you cut your workforce after you got your loan, or if you reduce people's hours after you got your loan, that can negatively affect the amount that you can claim as forgivable. What the FAQs get into, and this was again a rule that was in the PPP Flexibility Act, is that even if you reduce your full-time employees, you won't take a hit for that. You won't sort of be penalized in terms of what you can claim for forgiveness if you can document either an inability to rehire individuals who were your employees on February 15th. So this might be someone you laid off and asked them to come back and they didn't come back for whatever reason. Or if you can demonstrate an inability to hire similarly qualified individuals for those unfilled positions by the end of 2020. One thing the FAQ makes clear is that if you're going to try and use this exception, you are actually required to inform the state unemployment insurance office of any employee's rejected rehire offer within 30 days of when they actually rejected the offer. And also they make clear that you need to retain records that reflect that you qualify for this particular exemption. So written offer to rehire an individual, written record of the offer's rejection, which may not always be easy to get because a lot of times you might reach out to someone and tell them you want to rehire them and they just never get back to you. And also a written record of efforts to hire similarly qualified individuals. So keep in mind those, I think those are both important. The requirement to notify the state unemployment insurance office, that's obviously a little bit of a additional aggravation and hassle is to have to reach out to them. And then also keep in mind that need to retain those documents reflecting that you actually qualify for the exemption, because that is going to be important and that may be something that your lender asks for. The next bullet there is pretty specific. It's for certain seasonal employees that use the 12-week period between May 1 in 2019 and September 15th of 2019 to calculate the maximum PPP loan amount. It just makes sure that you should use that same 12-week reference period when you're calculating any reduction in the amount of loan forgiveness. If we can move on. And then we got a few more FAQs here just to finish up on loan forgiveness reduction. The first one here is sort of specific to the actual loan application. If you look at where you actually have to record whether or not you qualify for any of these full-time employee reduction exemptions, it's on Table 1 of the PPP Schedule A worksheet. That Table 1 really only relates to employees who made less than $100,000 in 2019. So the question that came up was, well, if I'm claiming an exception with regard to an employee who made more than $100,000 in 2019, where do I record that? And SBA is just making clear you put it on the same table, notwithstanding the fact that it looks like that table only applies to people who make less than $100,000. There are some FAQs on how to calculate the reduction in the loan forgiveness. Well, it's actually only one FAQ, but it provides a series of examples regarding how to calculate the reduction in the loan forgiveness amount arising from reductions in salary or hourly wage. Again, to recap, somebody made less than $100,000 in 2019 and their salary or hourly wage was cut by more than 25% during the covered period. That can result in a reduction in what you can claim as forgivable. So there's a few examples there that are worth taking a look at if you're struggling to understand how that rule works. Excuse me. And then lastly, the very last FAQ, for purposes of calculating the loan forgiveness reduction, you only take into account decreases in salaries or wages. So you don't take into account reductions in other forms of compensation, presumably reductions in bonuses or tips that might have occurred prior to the covered period. That's sort of an interesting FAQ. They don't really get into whether or not you can take into account increases if you try to bump somebody up, for example, by giving them a bonus. And I think it would be helpful to get some additional guidance on this particular point, but something certainly worth keeping in mind. And that is it for the FAQs. So I will now turn things over, I'm assuming probably to either Jason or Carol or both of you.
You would be correct in both scenarios. Malcolm, thank you so much again for joining us this morning. As always, your contributions are fantastic. They're amazing, and we certainly appreciate you spending some time with us and look forward to having you on again in the future. So what Carol and I would like to do now is just take everyone through a few slides of some other general frequently asked questions. And again, like I mentioned earlier, these come directly from you, the participants here on these webinars, as well as the clients that we have that come into the various parts of the support staff here at Prestige. So I will say that Carol's going to answer a few questions regarding a general variety of loan areas. But then from the HR point of view, we have been receiving a lot of questions, unsurprisingly, around travel and how to handle those situations with the more and more states that are requiring quarantines and really looking out for your employee base and their health and safety. This is where a lot of questions are coming from, and we'll take you through a few of those as well. So with that being said, I'm going to start off with a few questions for Carol. And first one states, has there been any definitive research that the federal unemployment insurance supplemental has caused delays in return to work? This supposition has caused me many problems with furlough and layoff management.
Yeah, there isn't any specific research, but we are hearing from some clients that they have people that do not want to return because they were, this is now past tense, making more on unemployment than they would possibly make with returning to work. So the jury is still out whether it still had an effect, and that has expired, and there is no word on when it might return. So that shouldn't be a problem any longer.
Great. Next question we have here is, has the loan forgiveness for loans under $150,000 been approved?
Right, and what this caller meant with this question is there was talk of some automatic forgiveness, meaning if you borrowed less than $150,000, you didn't even need to apply. And that has not been approved. I believe one of the plans, either Heroes or Heals, includes some language regarding that, but as we all know, there has been no agreement between the House and the Senate, so that's up in the air still.
All right, moving to the next slide here. First question is, if you have used up all of the PPP funds and want to use a 24-week period, do you have to wait until the 24-week period ends to get the reports? We want to apply for forgiveness as soon as the banks allow.
You do not. That was in the, I believe, in the Flexibility Act clarification that you don't have to wait for the 24 weeks to end. You can do your calculations and submit your application at any point in that 24 weeks. I do need to point out that banks have not received their guidance from SBA, as much as the FAQs that came out yesterday do apply to lenders. It is not the official guidance that they are waiting for in order to accept the applications. So the majority of banks, I have one client that has said their bank is accepting. If they are, they're accepting it and sitting on it because they don't have a process for approving those yet.
Great. Next question we have here, is there any information on extending the $600 additional federal unemployment insurance dollars that ended on July 31st?
As I mentioned earlier, no news yet. You've heard the conversations that's in the news. I believe the Senate is willing to go with $200. The House wants the full $600. They're talking about trying to restore people back to 70% of what they made, which Department of Labor software in each state really can't do. So no new information. It is over as of now. All
right. Next slide starts with my questions.
And I will be the reader so that you don't all have to listen to just one of us. The question is, many New York City employees need to take public transportation, including subway and the LIRR. Employees don't think these modes of transportation are safe because people don't always comply to wearing masks. Since we've opted to extend working remotely to the end of the year, what is everyone else doing who have companies in Manhattan?
Right. So I have to thank Claudia, one of our trusted partners here, for sending this through in a previous webinar. This is a very common question in a time where we're really unsure about how to handle certain situations, but we also want to look out for the health of our employees. You know, we want to have an idea of what similar organizations are doing. And it's not uncommon for us to get questions such as these to kind of so that our clients, our partners can help prepare. What I can tell you is that many of our clients, not just in New York City, but around the country, when they do have the capability to offer remote work or have the flexibility for employees to work from home and that setup, they certainly are gravitating more and more to do that. Maybe not so much on a permanent basis, although we are seeing that as well, but certainly as we move into the fall and then even using that end of year deadline as a basis point, we are seeing more and more flexibility, and we do urge that as well. If you have the ability to provide flexibility with your employees, then we certainly urge you to do so.
Excellent. The next question, vacation time. Is it required to create a policy indicating where employees can travel? If the employee visits an area that requires quarantine, do we need to pay the employee?
Great question. Important to note that you don't need to create a policy related to where employees are traveling. However, it is very important that we make it clear that traveling to a place that requires quarantine will require the loss of pay or increased use of their sick time. Right? The most important part of what we're trying to do moving forward, especially during this time, is to be consistent and communicate with your employees so that they know what's going on and that there are no surprises.
Next question, has Prestige written a travel policy that we can include in our employee handbook?
So yes and no. I mean, the easy answer is yes, we have certainly written policies. What I will say is that we don't have a template policy that we've sent out to everybody because honestly, everyone's needs are a little bit different. However, we do have our template policies that we work off of, and I do urge you to reach out to your HR business partner to help assist you in creating one that's specific to your company's travel needs and really tailors the needs of what you're trying to get out for your employees and to communicate over to them.
This next question is a great one. Are we required to ask employees if they've traveled to high-risk states?
No, you are not required to ask, but you certainly can. Again, if you do ask, I'm going to keep going back to this consistency part. If you do ask, it's important to consistently ask all of your employees, not just some. We don't want to create a discriminatory environment where you have employees feel like they are being singled out for their travel. So again, make sure that what you do for one, you do for all.
Excellent. Can we decline the time off for employees traveling to or from a travel advisory state?
No. Employers cannot dictate what employees do on their personal time. This is something that we have covered, I think, fairly recently. It's always recommended to remind employees about their travel advisories and safety concerns. And if applicable, you want to also discuss remote working arrangements upon their return during the self-quarantine period, as well as reviewing other company policies and procedures on such matters. But again, employers do not have the ability to dictate what employees do, where they travel to on their personal time.
Do we have to pay the COVID FFCRA sick time to employees who voluntarily travel to or from a travel advisory state?
Yes, thank you, Carol. This is actually our last question, and the answer to that is yes. You know, the mandatory self-quarantine, as you can see up here on the screen, is 14 days for traveling from an advisory state. That is an eligible reason for the 80 hours of federal sick pay. Of course, that's if they cannot work remotely. So all great questions, and again, the trend is we're seeing a lot of questions around travel, especially with the growing number of states that we shouldn't be traveling to. So I urge everyone to reach out to Prestige, reach out to your HR business partner if you have any questions, whether it be to, as we mentioned, formulate policies or templates, but also for any other random questions as we're looking to protect not only our company, but of course, our employees. I do want to thank everyone again for joining us this morning. I'd like to send a special thanks out to Malcolm and Andrew, as well as Carol, for helping out. As always, this presentation will be listed on the COVID Resource Center within the Prestige website, so I urge everyone to visit the website for not just a slide deck and a recording of the presentation, but for the wealth of information and knowledge we have created on that website. Stay tuned for invitations to our future webinars. Next week, we'll be having an employee assistance program. National EAP join us to talk a little bit about what they've been doing, as well as what we've been doing in conjunction with them. And of course, please take a look at our podcasts and the information we've put forth for everybody along with the communications. Thank you again. I hope everybody has an amazing rest of the week, and I look forward to speaking with everybody soon.